AngloGold Ashanti has agreed to sell its Serra Grande mine in Brazil to Aura Minerals for $76 million in cash, along with additional deferred consideration linked to future production. Now, the transaction forms part of AngloGold's efforts to streamline its portfolio and focus on capital allocation and operating efficiencies. And joining us for this conversation is Peter Major, Mining Analyst, to take us through some of the reflections. Peter, very good evening and good to have you with us on the show as always.
Wow, thank you very much. I'm not sure I can add too much more to what the Anglo announcement gave. It's a big company and they've got a lot of projects, and I haven't been keeping track of a lot of their divisions. But let's try. Let's see what I do know.
Peter, you say this with every interview, almost every interview. I know you know, and I trust you will help us navigate this conversation as you do every time. But I guess let's start then, looking then from an operational standpoint. Talk to us about what does the sale then of Serra Grande suggest about the mine's performance and maybe strategic value within AngloGold's portfolio?
We're probably always biased because we're looking at these events from the eyes of a South African. So every time we see a South African company buy an asset outside of the country, we say, oh, gee, they're paying too much, or they're paying so much more compared to what they could have done in South Africa. And then when we see a South African company sell an asset, we say, oh, it's selling it too cheap. So, yeah, at first view here, we thought, oh, geez, they're selling this 80,000-year producer for $76 million. You know, that's virtually what it earns in free cash flow in a good year. So you're selling it for what it makes in 1 year. But when you dig down, they've had this asset for quite a while, and it has a limited lifespan, maybe 5 years at these current gold prices. And AngloGold has bought some large assets, and they have some large assets. So there's so many different operations. They are cleaning up. They're consolidating and cleaning up, and they want their assets to be large and long life. And this is a very small asset. It was barely 2.5% of the total production in AngloGold, but it takes up time, takes up money and energy. And there's a kicker. So yes, it's $76 million now, and then 3% of net smelter royalties. So if the gold price keeps going up, they could get another $76 million just in 5 years of production at the higher gold price. So I think the deal makes sense, and we can argue all day, could they got a better price, or is it fair? I think it's close to fair for what the asset was.
And looking then at the Serra Grande, as you describe it, one of Anglo's smallest and also one of its high-cost operations, taking up time and money. Peter, maybe let's get an understanding of what typically makes a mine high-cost, if you can, in the Brazilian context. What are we looking at when we think about that?
A lot of the problems that we encounter, or a lot of the challenges we encounter in South Africa, we do encounter anywhere else in the world. You always have to deal with communities. And as much trouble as our communities have given us here, we seem to have them under control. I think since COVID hit, you see hardly no problems with our unions. You see very few problems with our communities. But boy, in South America, going down to Peru, Mamma Mia. You know, Peru must have the worst community issues for gold mines of almost any country in the world. But Brazil has had a lot as well. And we've had some horrible tailing dam disasters in Brazil. So I would say rehabilitation, tailings dam construction, it's probably going to cost you more in Brazil than it will any other country because it's had such devastating consequences. So we've seen this in South Africa. If you're nearing the end of your life, you could have an open-ended liability. You're not sure what it's going to cost to rehab and have official closure of that mine. So they're being smart here. if they really believe this mine's only got 3, 4, 5 years left, it's an open-ended liability. How much it would cost before the government would okay them closing the mine and calling it rehabilitated. So they are shifting that problem, that worry, onto the current buyer, the new buyer. So that is a smart move. And the net smelter royalty, we're seeing that more and more often, that companies are willing to sell an asset, just like Anglo American Platinum, Amplats, when they sold a lot of their old platinum mines to Sibanye. They gave Sibanye a very good deal. Sibanye didn't have to pay too much cash up front. Metal prices were pretty low then, and Anglo was trying to clean up their platinum portfolio. But they said if the platinum price goes up, Sibanye then had to pay on a lot more, and it ended up being quite a bit more. But that was okay. Sibanye didn't have to pay it until the metal price went up and those assets were generating all the cash needed to pay the final purchase price. So that works out really well for both parties.
Yeah. So as you point out then, Peter, a good deal when it comes to AngloGold then, but what about the impact? What kind of impact, if any, do you expect this sale then to have on AngloGold's balance sheet or production outlook then for financial year 2025 and beyond?
Boy, this helps their balance sheet at a time that the balance sheet's actually in pretty good shape. If you would ask me this question not even a year ago, I think Anglo's balance sheet, they probably had net debt. It was way over $1 billion, probably $1.3, $1.5 billion on the balance sheet. And that balance sheet had been really stretched really since the end of the 1990s when Anglo's got into that horrible hedging program. And a decade later, Mark Cutifani took over, and he managed to close that hedge book, thank heavens, but he had to borrow billions to do it. But AngloGold's balance sheet is really good now. These high gold prices have helped tremendously. And I think they're going to have net debt on the balance sheet, maybe $500 million. And the size of AngloGold, here's a company that generates 3.5 million ounces a year. That's really small. This company is all of a sudden looking quite attractive, and I see analysts are pushing up their ratings, calling it a buy. And the future is probably better now for AngloGold than it's been in over 25 years.
All right. So in your view, Peter, what types of assets then are majors like AngloGold likely then to target going forward, especially in the context of rising geopolitical risks, ESG compliance, just among some of the demands?
Yeah, they're large assets in Ghana, in Egypt, in the DRC. They've been there over 20 years. Well, the Egypt assets, they only bought not even 2 years ago, Sentiment. But these are definitely tier one assets. These are assets that can produce 500,000 to 1 million ounces a year. And we haven't seen too many issues with the villages, with the ESG, with tailings dams breaking in the DRC, in Ghana, and in Egypt. So I like to see companies that have these big assets, and they like to have it because then you can plan a long life of 20, 30 years. And really, for these big companies to grow, I don't think any of them even come close to outperforming their peers or outperforming the index by doing mergers, acquisitions, sales. That's not how AngloGold grew 100 years ago under the Oppenheimers. They grew by starting mines from scratch. And I hope countries will open their eyes and say, why don't we have that again? What do we have to do to make ourselves so attractive that mining companies will build a mine from scratch and put all that money into the ground instead of doing mergers and acquisitions, sales on the stock market? I think there's a lesson that we need to derive from here, that countries need to derive, that all these billions going back and forth in sales and deals, but for investors, They need to find gold companies that are putting money in the ground and taking assets from nothing up the value chain, up the value curve. And that's how you get outperformance. If we just look at Barrick and Newmont, the two largest gold mining companies in the world, and they're barely trading at prices higher than 10 and 20 years ago. So it shows it's growth companies that will outperform and that will give an investor a good return. But in this gold price environment, it's good for everything. Starting new mines, buying old mines, boy, these gold prices stay. All gold shares are going to make money, but we want the ones that grow as they make money.
Yeah. So, Peter, that's where we're going to wrap up our conversation. But I must say, given your comments earlier on, I see your strategy there of under-promising and over-delivering when it comes to the content and helping us unpack the latest when it comes to mining.
No, thank you. I wish I could have been more specific on a lot of these issues, but it's put AngloGold in good shape. It'll start re-rating if they keep on doing things like this. Getting out of the short lives, but keeping a chain that gives them the royalty agreement in case this asset runs longer than they think.
Yeah. All right, Peter, we're going to leave it there. But as always, thank you again for taking us through that conversation, sharing your insights with us. Peter Major, their mining analyst, taking us through that update. AngloGold Ashanti has agreed to sell its Serra Grande mine in Brazil, that to Aura Minerals, for $76 million in cash.